Well, the housing boom is over and now we're in a substantial downshift in activity, according to the latest figures from the Real Estate Institute. Its latest report shows the number of properties sold nationwide fell by 35.2% compared to this time last year. And the total number of houses for sale increased by 70.8%, showing a significant shift in the market. Annual price growth is also more moderate, the month-on-month trend showing a fall in median prices too. So what does this all mean? Well, Principal Economist and Director at Infometrics, Brad Olsen, joins me now from Wellington. Hi, Brad. So the slowdown is real, it is here, and it is right across New Zealand.
Yeah, absolutely. We are seeing that momentum has completely shifted when it comes to the housing market. Certainly in recent times, that's continued to move forward. What we are now seeing, though, is a divergence across the country. Although the momentum has definitely gone out of the housing market across New Zealand, in Auckland we are seeing some quite significant and sustained price falls there. Now 5 months of declines coming through. Other parts of New Zealand, though, haven't sort of shifted downwards quite as fast. We know a number of regional centres still holding their own. Canterbury is one that's still maintaining a lot of momentum. Wellington, though, also seeing quite a substantial downshift. So with that change in momentum, with the shift in the housing market and very high interest rates, all bets are off in terms of just how quickly things continue to go down.
And Brad, how much further is there to run in this downturn, do you think? I know it's a tricky question.
It is, and look, I think everyone in New Zealand has been wrong for a long time about the outlook for the housing market, but realistically we know at the moment that there are a lot more houses on the market than previously. We know that things are having to shift quite quickly when it comes to house prices. Interest rates coming forward with quite significant rises. That's completely changed our expectations. At the moment, looking forward, we do expect to see house price falls of anywhere up to sort of 5 to 10% still, and I know other forecasters are forecasting even more over the next 12 to 24 months. So there are some big shifts, remembering though that we've still seen some considerable rises in recent years, and even with those falls in house prices likely to come forward, we do still expect that housing will remain more unaffordable than it was before the pandemic. So although that shift is coming off and we're seeing a reversal there, it's still cold comfort, particularly for first home buyers who are going to struggle to get back into the market.
Well, what does it mean, Brad, I suppose, first of all, for people who are thinking of selling right now?
I think realistically sellers have got to quite significantly adjust their expectations around how much they might get for their house. We know that with higher interest rates, those who are looking to buy and therefore borrow from the bank are not able to get quite as much money as they used to, in fact quite a lot less. And so that means that buyers are going out there with less cash in their back pocket. They just can't afford the prices that sellers are currently putting up. If someone wants to make a deal, if a seller wants to get rid of their house, they are going to have to moderate down just how much they're willing to take. And the question for some sellers will be, do they try and get in now and sell their house before things get even worse, or do they hold out because they don't see it to be worth quite as much? Some very difficult decisions, but what we know across the country is that there are a lot of buyers out there who simply don't have as much cash as previously. Therefore, sellers who are expecting high prices because they've been so high for so long are going to have to pull back those expectations. That's a considerable shift in the market that we haven't seen for some time.
Brad, it's such an interesting time as ever in our housing market. Thank you for coming on to 8 p.m. this evening.